Hey, welcome to the podcast, everybody. Thanks for joining me. Appreciate it. Well, you come home from work today, you look at the markets, and you say, boy, we're up 69 points. Not a bad day. Utilities were up. Everything's pretty green on the screen, so must have not been too dramatic, right? And you got the NASDAQ up, and really just a great day. You got the computer index up, the banking stocks up. Hey, what's not to like? Russell 2000 was up, 86 basis points, but it actually wasn't quite that clear cut because you missed quite a bit today if you weren't watching it intraday. The stock market really started the day. We came into this, after September 11th, and there was no anniversary terrorist attack. So, I actually had a short position Friday, covered it, thinking we would have an update today. And, of course, we ended up with an update, but it was a long path to get here. We come in this morning, and we didn't have any type of attack, but yet we had rumors of a Greece default. And so the stock market opens down, about 140 points, gaps down right at the beginning because Greece may default. And it's been kind of them, I don't know if you want to call it procrastinating, but, inevitably they may default. And so stock market sells off on that, rallies back. We start drifting around, bouncing around. We're swinging 140 points each direction. And then late in the day, we start to see that the market starts rallying for no reason. Start looking around, doing some research, figuring out that the FT, Financial Times, is reporting that potentially China wants to invest into Italy, potentially buying some of their bonds or some securities. So I don't know what the Chinese word is for bailout, but that's essentially what got the market going. But yet nobody could substantiate that rumor. So here we go. The stock market starts falling back down again. It looks like, okay, we're going to go down to new lows, and for the day. And then, of course, the rally not only turned around and we got back the 160-point loss that was there in the 2 o'clock hour Central Time, but it actually turned into a gain, and it finished up 69 points on the day. So kind of a strange day, but a lot of volatility. And this is one of those times, this market almost right now is like Google Earth. For those of you that use Google Earth, you know what I'm talking about. You type in something, and it starts out really big, right? Shows a whole big thing of the Earth, and then all of a sudden you start zooming in until you get to almost a specific street you're looking for, and you can see the trees, and you can see the cars, and whatnot. That's what this market's like. We went from a market that you traded on a multi-week, multi-month basis. Then in the last few podcasts, I've been telling you that hourly has been working in the last month or so, right? Hourly's been working pretty nicely if you look at just an hourly chart. Now we zoom in, and it's a 5-minute chart, and here we are on a minute chart. I mean, within the first 30 minutes of trading today, you were down 140, and then it went up 140 points, and it was even. So unless you're doing day trading right now, which I know many of you are not, and that's not what you're interested in, it's very difficult right now. So I think that cash right now is still the place to be, and it doesn't earn us much, but it keeps us sleeping at night, and it keeps our powder dry because there's going to be a time we can attack and buy things that are just dirt cheap. And, that time isn't necessarily right now. As you know, I've had a lot of cash really since before the debt debate and held it. Now, I've made some trades, I've bought some things, sold some things, took some profits, took some losses on some things, but pretty much I've kept my volatility really, really low in comparison to the markets. And that's fine. That means on a day where it's down 3% like Friday, I'm not losing hardly anything. On a day where it goes up a little bit, not making very much. But I'm okay with that until a trend develops. And that's really what we're not seeing any kind of trend. We're seeing the intraday moves, and really I think the professionals fading it, right? When it's down a lot, they come in and they buy it like they did today, at the close. If it's up a lot for a couple of days, they come in and sell it and start shorting it, pushing it back down. And so the average investor looks at that and goes, boy, this is really, really tough right now, and it is tough. So if it's too tough, you simply sit on the sidelines and watch. And again, pick your things you want to buy and buy those. Keep some stops, take some profits when they're there. But in the big picture, with a big chunk of your investment money, I don't think this is a game you want to be playing right now. It's just too difficult right now. Now, I'm showing you the Dow Jones. I'm switching from a 1-minute chart to a daily chart, and I've been showing you the S&P the last several podcasts. Same similar type of picture, but on the Dow. And you can see the Dow, I mean, we're still in this little trading box here, and that's really what it boils down to. So, we went to the bottom of the range, went kind of up to the top, bounced down to the bottom, back up to the top, and, the low was 10,604, something like that, 10,640. But we bounced off that, and that was August 9th. But we're at the bottom end. And you could say, well, hey, isn't this what we want? We want an intraday reversal, right, where it's down a lot, and all of a sudden it comes back and it finishes up. And that's what the pattern looks like for today. That little candle at the end there, that's what it looks like. Well, we've had a few of those, and they haven't really materialized. When you look at today in total, even though we had the reversal, it's a pretty nasty day. There's a lot more selling, and it was a much heavier, intense selling than there was heavy, intense buying. As I've been mentioning, we had one there, reversal, there's a reversal, there's a reversal. Nothing really to write home about. So until a trend develops, hey, it's just trading right now in the short term, and don't try to be a hero. Now, before we get back to the markets and the Dow, I do want to point out something, and a listener to the podcast pointed this out to me and reminded me that, remember back when we had the Greece issue, year ago, whatever, we hear about China coming in and stepping in at that point. So, there's always rumors, and the market's going to move on that, but that's not how you make money over the long run, is by buying stocks or selling stocks based on these intraday rumors. What we need to do is look at how much real demand for stocks are there, how much real supply, and right now it's a real tug-of-war. There's a real battle going on. There's big hedge funds. Do you understand that you've got some of the biggest hedge funds, the most successful hedge funds, and the managers that are down 20, 25% this year? And these are guys that have been historically some of the best over the last several decades. And they have just been getting slaughtered. So you have a real battle going on for those that are negative on the market and really want to push it down and have us go into Armageddon and get down to the Dow 6,000 again. And then you've got others that are constantly just, it's buy and hold. It's, we always buy the dips because that's what they're paid to do. Is they have to be invested in stocks all the time. You and I, and I've mentioned this several times, we're neither one. That's why I say we need to be agnostic, because we have all the tools available to us. Cash, we can short, we can go buy commodities, we can go buy gold, we can go buy stocks, we can do whatever we want. We can trade 5 minutes later if we want to and sell something. We can do it 5 months later. We're very flexible, and a lot of these people have mandates. They have to make certain trades, hold so much in certain securities, but a lot of them are just getting beaten up really badly right now and are really hurt. So there's a real battle going on, and you can see it from the picture here in the Dow Jones. I mean, look, you can see what's been happening really since August, is this tug-of-war going back and forth and back and forth. And look, as I said before, wait till a trend develops. But one thing that, the bulls look at is they say, well, we're kind of, on a closing basis, we're kind of making, higher lows there, and we're doing this number. Maybe this is the best time to buy right now. And again, if you're into that quicker trading, you want to scalp a few points here and there, feel free. One thing that I've been watching is, while the market was kind of moving sideways there, the relative strength was actually going up. But in the last few days, kind of broke that and started heading back down again. So, again, there's too much if possibilities and 50-50 this and that. I would prefer to, cherry pick those deals when they're available. The Coca-Colas, the Microsofts. Continue to get your income producing things, but remember that right now what's also happening is you have a couple of things going against you if you are bullish. For example, you've got the dollar rallying. And, right now you've got the dollar actually turning the corner here, and it's had a nice run. Now, we talk about UUP sometime, which is a way to get exposure to the dollar, and we know over the long run the dollar is going to continue to fall. This is a counter-turn rally. We see these all the time in the past. But what's happened is it's putting pressure on gold, and it's putting pressure on stocks. And so UUP just doesn't move that much. And so it's not something that I typically trade, although I have in the past. But it's a big move in the dollar. What's happened? So it's put pressure on gold and stocks we talked about. So kind of broke above on Friday, and that really pushed the market down. But the fact is that when you see what's happening with the Swiss franc, which is just getting killed, and there is an ETF for that. FXF is the Swiss franc ETF, and you can see this thing reached over 139.50, and it's now 112. Just been getting slaughtered because they wanted to peg their currency to the euro. As the euro's going down, so is FXF, or the Swiss franc. But as the euro's going down, now the dollar, relatively speaking, around the world, if you can't go to the Swiss franc, right? You want to avoid the euro, I'll go to the Swiss franc. Well, you can't do that because it's pegged. Now what you do is you go, well, maybe the dollar's the next best thing. It's the best house in a bad neighborhood, and you see the dollar going up, and so that's really putting pressure. So you have to understand that all these things are interconnected, and when one thing goes up, it causes this chain reaction. And that's kind of the big deal with Greece right now. So what if Greece defaults, right? We kind of knew this was coming, right? Well, because you don't know which French banks have what exposure to Greece, and then you don't know what American banks have exposure to European banks, and it snowballs and trickles down. So it's this counterparty risk that they're talking about, and that's really what's keeping pressure on the markets and it's bouncing around. But we are getting closer to the oversold side if you think of it like a pendulum, and so again, take advantage of that if you want to. Just keep your stops in there. But I really don't think you should be discouraged by this market because we're going to get rallies. And if the rallies don't have any oomph behind them, if they don't have any volume, if they don't have any quality of volume, if they're for no reason and there's just no excitement behind them, we won't see the persistency, right? We need to see 2, 3, 4 days in a row. If we don't see that, look at it as an opportunity to short. And you can do that with the exchange-traded funds, and that's what I plan on doing if we don't get any meaningful rallies. But again, right now, we still have this tug-of-war going on, and so far, it looks like the bulls are on their tippy toes, just about to fall in the mud, right? It looks easy, but what's actually happening is nobody's a clear winner just yet. We're bouncing around. We've already had the sell-off to reflect some of this news, so you see what happens when there's a little rumor, whether it's good news or not, about China bailing out Italy. The stock market bounces, and it can bounce very severely, and that's why the easy trade would be just to go all net short, right? Sit on the sidelines, get all cash, and then go net short, and watch the market, watch you make all these profits while the market goes down. Well, it's not that easy, and you can see what happened today. We're down 160, and it finishes up 70. 220-point gain, that's a big difference, right? And that can really hurt you if you're short. So be careful in what you're doing, and just play small right now. I think that's the bottom line to what I'm trying to tell you. All right, folks, have a wonderful day, and we'll talk to you soon. Don't forget to check out twitter.com/Eggerss throughout the day and karleggerss.com, subscription up at the top right, and eggerscapital.com for the money management website.